Good morning, everyone, and welcome back to the Property Trio, a special episode today. Of course, we're talking monthly updates. So we've got all of the facts and figures from the month that was April and some interesting stories and interesting breakouts from certain capital cities. And to unpack it all, I've got Dave Johnston and Cate Bakos. Good morning.
Good morning.
Or whatever it is time when you're listening to this. Let's talk about national figures to start with, because it's fairly kind of soft. We're talking 0.3% across the board, 1.1% for the quarter. That kind of sounds like a fairly modest amount, but we've got a couple of little breakouts, but not the repeat offenders that we saw in the Brisbane, Adelaide and Perth of, the last maybe 12 monthly updates, although they are still clinging on. What's the takeaway for you guys?
Well, I'm pleased to see Melbourne still positive if I'm looking selfishly at my own capital city, but at 0.2%, that's the smallest gain shared with Sydney of all of the capital cities for the month. But as we know, 30 days is not enough to write a story on. But Darwin for another month, so third in a row, it's top of the pops at 1.1%. So it's had very significant growth month on month since breaking, out of the barrier at the beginning of this year. Combined regionals, though, at 0.6% and combined capitals at 0.2%, the regions are still doing a lot of heavy lifting.
And you compare the combined capitals median at 905 versus the regionals 673. Does that tell part of the story? We're still coveting these affordable markets?
Yeah, I think so.
Dave, we've got Darwin with 3.4% growth for the quarter, 3 times higher than any other capital. Is this the story of the wind finally hitting the sails of Darwin? And of course, we just did that listener question episode with the Darwin special. So hopefully we said very complimentary things about the market and we can claim credit.
Yeah, I think thankfully got in with the Darwin episode before it really took off, because I think it's about to be honest. So Darwin really shut the lights out again. And as we go through the episode, we'll actually see a whole bunch of metrics around Darwin that shows it's probably in the early stages of a bull run. And I think, we can say that with probably quite a bit of certainty now, based on the numbers that have come out across the board. I've written them down, so I'll run through a few. Like time on market is down by 13%. Sales volume is up by 35% year on year. Vacancy rates are down to 0.7%, the second lowest in the country of the capital cities. Rents over the last 4 weeks, according to SQM, have jumped 2%. The prices, a reason why people started going to the market is prices are still 2% below where they were in 2014. We've obviously got the really high average rental yields above 6%. The capital growth, as we've touched on now, is the highest of all capital cities for the last quarter. And then total and new listings, according to SQM, and similar with CoreLogic, they're down 32% and 27%. So, massive, the highest demand of any capital city and the lowest percentage of listings. Now, as we've just spoke about the new raised mic prior to coming on air. You've been speaking to a lot of buyers agents. We've heard anecdotally who are buying off markets. Now, maybe a lot of those sales aren't recording in these listings, which is why the numbers are so low. But still, it shows, in the sales is up 32%. There's a hell of a lot of demand for Darwin.
And one thing, I think, if we think back to the rise of Perth, we saw 2 things in concert that I think are the magic parts of the recipe for an appreciating market. You've got a contraction of volume, and then you're seeing the aged listings disappear, and we can kind of see that as well in the data, Cate. And we saw some massive numbers for Perth. I think I remember seeing 30-40% decrease year on year on aged listings. What story does that tell you? Because I know you've written blogs about these maybe ugly duckling properties.
Yeah, if we look at old listings, they're 180 days plus. When they start getting eroded, that's buyers scrambling to get their hands on anything. No, often it's the junky old stock that's either overpriced or compromised or both, and it's floating around. And I'm not suggesting that it's always compromised, but sometimes it's overpriced and the value's not there. You might have a vendor that's just sitting there saying, if I can't get 600 back for this unit, this bad unit that I bought and spent too much on, if I can't get my money back, I'm not selling. Well, one day that unit will represent good value. And when you have a surge in values and you've got a vendor that's just been out of touch with this listing that's been on the market for sometimes 2 years, all of a sudden it'll get multi-offers on it. It's not the agent playing games. It's just the market's caught up and the vendor hasn't.
Let's come back to Darwin, but you mentioned the regions. In the past 3 months, the regions are comfortably outperforming the capitals, and some surprising areas like regional South Australia doing really, really well, and even WA and Queensland. What is it about the regions that are still firing, you think?
Yeah, I think that we've got a lot of investors out there who are keen to spend their money. We've had equity gains in a lot of cities that hadn't had strong equity gains for a long time. And they're looking at properties that they can get their hands on that are within a comfortable price band for holding cost reasons, for risk reasons, for dunking their toe in the water reasons. Some of these reasons are irrational. These buyers might be able to get their hands on $1 million and buy something really high quality, and instead they're looking at spending $500,000. Regions offer that because you can get a house as opposed to a unit or a townhouse or an apartment. You can get a house for those kinds of dollars, and so they will turn to the regions. But not to talk the regions down or make them sound like a silver medal. If you've got the right strategy and you're targeting the right region, we've seen some amazing regional growth. You've just got to get the region right. You can't assume that all regions are the same. So with higher interest rates and investors that are conscious of their holding costs, I think we're seeing a lot of people setting their budgets at the regional market level. And I also know anecdotally that we're seeing a lot of intra-state migration. So people that are looking at their capital city market and their cost of living, we're in a cost of living crisis, let's be honest. They're making that move. And we also have baby boomers who are reconciling their portfolios or their superannuation balance. And for a lot of people, selling your family home and moving into a region could be a really good opportunity. So there's quite a few reasons why regions are humming. And I haven't even touched on visas.
Oh, yeah. You make some excellent points about the migration, Dave. We saw an article yesterday in Domain from Sue Williams that featured, I think might have been Simon Presley's data, and Bryce Holdaway was in there, and it basically was titled, "The number of Aussies who have gone bush could fill Canberra and the Sunshine Coast." Now, when they say bush, they just mean not a capital city. In fact, they talk about Port Macquarie in this story. I wouldn't call Port Macquarie bush. It's just a bit of a catchy title. Now, we know that there's not an obvious correlation between population movements to an area and price growth, but I wonder if a lot of these people leaving these higher priced capital cities just have a little bit more powder to throw at these purchases, and that's kind of moving the markets as well. Where do you sit on that, Dave?
Yeah, look, I think no doubt. I think as we've got more of the baby boomers retiring or downsizing, we're getting a transition out to the regional areas with the working from home phenomenons, that's long lasting. So that's causing a change of demographics and what people are willing to do and where they're willing to live. So we're certainly seeing that flow and effect into more people being happy to live in a regional centre and more companies being willing to have staff who are working from a regional centre that historically possibly wouldn't. And we'd probably all know of anecdotal examples and stories of that. I won't necessarily share them, but I can think of some. Like there's a business I know that has perhaps 100 staff in Sydney, and they've happily based around 20 staff around Gosford, for
Right.
example. So I just think that is a trend. And then I think if we just look at, say, WA, South Australia, Queensland, like the macro picture is often the regional location will continue to outperform post the city location finishing its run, if you
Mm.
like. It tends to still, the regional seems to still run often for another 6 to 12 months after the capital city. So, I think some of that might have been in predictions too, that would happen when we get to the end of this year. So I think that's part of what's playing out with those numbers.
Yeah, we've talked a little bit about the kind of satellite cities that often ride that wave of growth of their kind of main gravitational capital city, if you will.
Yeah.
Cate,
Yeah.
we've unpacked a lot about the quartiles over the last year or so, and typically the lowest quartile has been doing the heavy lifting for price appreciation. But in the latest data, there's a couple of little surprises there for me.
We do have some good nuggets in this one. Sydney, if I was just to look at that, and you can never look at one chart and decide that you've got a full picture on a city. You've actually got to look at a lot of different metrics, and then you start to get a really good feel. But on this one alone, Sydney's 25th percentile is showing 0.5% growth. Its 50th is showing 0.6%, and its 75th is showing 1.4%. That says to me that obviously Sydney's highest quartile of property values is the one that's given the most amount of growth of late in the last 3 months. And typically we find that cities in recovery do that. When cities are struggling, it's the bottom quartile that holds firm or registers a positive read in a lot of cases. I mean, for Sydney, all of those figures are showing positive, which is great. But I would argue that shows a recovery, maybe a modest one, but it shows a recovery. Melbourne,
the beginning of a recovery.
That's right. Yeah, they're the ones that pick up. And credit can play games with this. If we've got a sudden availability of credit, that can override some of the other measures and leading indicators that we might have relied upon, because all of a sudden, if there's more credit, the higher income earners can have a significant increase on the higher priced properties, and then all of a sudden you might see a surge at that level. So Melbourne is still showing that the 25th and the 50th quartiles are outperforming the 75th, which kind of goes against the grain of what I thought might have been happening on the ground. However, we are getting smashed with investor inquiry. So like we were talking about before, investors who are looking for value and at a certain price point, I think a lot of our growth has been stimulated by interstate investors who have looked at our median house prices and decided that Melbourne represents value. Brisbane.
I think people too are aware of the government throwing the money at the first time buyers, but it doesn't come into play until next year. So there's a price signal there to investors to get into this market in these price ranges where first home buyers are going to be competing really hard next year, but get in before that actually comes into fruition, which is one of the risks with flagging these policies, but they're not rolling them out for an extended period of time. So, we're possibly seeing that. And like, if we just correlate to Darwin actually is as highest performing is in the middle. We know Darwin's flying at the moment at 50th percentile is at 4%, 25th percentile 3.1, 75th percentile 2.7. So again, it bucks the trend. Usually when a market's on the way up, it's the most expensive quartile that goes first. But I think it's similar to what you're saying, backs up what you're saying, Cate. There's a lot of investors driving that market, and that's possibly happening in Melbourne too.
And a lot of investors want houses. So if you look at Darwin and you look at if you look at Darwin's bottom quartile, it's mostly representative of units, and that's not. We can see that they're selling. I mean, that's enormous growth, but the middle quartile, I think that's bang on for houses, and that's people saying, I want a piece of Darwin and I want a house.
Yeah.
Brisbane surprised me. Brisbane it's only had almost negligible growth in its 75th quartile. Does that suggest it's coming back a little bit? I don't know. I don't want to rain on Brisbane's parade. It's a beautiful city and it's performed very well, and it's got the games coming up. So I am scratching my head at that data point. It's still got very strong growth for its bottom quartile, so maybe people are still jumping on board, but with lower budgets and they're targeting units. I've chatted to quite a few.
It has been slowing down for a period of time.
It has.
Market.
Yeah.
So, yeah.
I've chatted to quite a few interstate buyers that have said, we were running the ruler over Brisbane and we came close to buying a couple of properties and then we decided it's overheated. And I've had a few people say that. And I don't know what determines an investor saying something's overheated unless they're poring over the data like we do, which they might well be, because a lot of people jump on a good thing while it's still going hard.
Yeah, and often what an investor will be looking at is what were properties selling for a month ago and what were they selling for a year ago or 2 years ago, and then they'll go, hang on, that's moved a lot. And so I think if you look at Brisbane with the upper quartile really almost flat compared to the middle and lower quartiles, that probably is generally driven by the local owner-occupier market at the higher end. And so that says the locals are going, I think we've paid a lot for properties for a period of time. It's starting to get too pricey. And then, if you pull back to median value of houses, Brisbane is 50,000 above Melbourne. It's 12,000 above Canberra. It's in the number 2 spot. It's also in the number 2 spot for units as well. So people are, it would appear that people are starting to say, look, that it's a bit overpriced. And we know just like generally the upper quartile rises first, it also is the first to slow down on the way down. So that's what we're seeing there, I suspect.
What's intriguing is for each of these 8 blocks, for all of our capital cities, we've got 3 blocks that almost look identical. And they're the ones, as you've just said, Dave, with the highest bottom quartile, followed by middle, and then the lowest upper quartile. And they are Brisbane, Adelaide, Perth. They're almost carbon copies of each other. And they were the cities that were soaring for the last 2 years previously. And it's interesting. I'm not suggesting the tide has turned, but certainly there's a new wave.
Well, I think it has.
Well, they're not on the nose, but their rate of growth is not what it was. And it's now Darwin that's going gangbusters. Yeah.
Well, if you consider, I suppose, the last calendar year, Perth did 19%. Its annual rate is now 10%. So it's ostensibly halved. Brisbane and Adelaide are trailing behind 9.8 and 7.8. So if we talk about mean reversion, which we kind of debunked in a previous episode, but if we do take a moment to subscribe to that theory, then Brisbane's really only got one way to go. And so you might argue as Adelaide and Perth. They've had a hell of a run. I mean, how long has Brisbane's market been appreciating for?
A long time.
A couple of years, I would guess, yeah.
The advocates were exhausted. Every time I catch up with my Brisbane buddies, they're just under the pump, and it was unrelenting. I've got a question for you, Dave.
Debunked median mean reversion. I would say that it very rarely, it's not guaranteed to happen in every circumstance, and it doesn't happen in isolation.
Question for you, Dave. ACT, their upper quartile is sitting on 0. It's the only one that has not got any growth at all. Yeah. What's the story there? Obviously, election time and pretty jittery, pretty sensitive. Would you put it down to that?
Yeah.
People sitting on their hands?
People sitting on their hands. If we think back to the polls, there was a period there, crazy as it sounds, now where Dutton was actually preferred Prime Minister, went just ahead of Albanese. I suspect we'll start to see the Canberra market move again now that we've locked in a strong Labor government. And I'm pretty sure I saw a couple little price signals that that's about to take place, that Canberra might now move forward quite strongly.
That'll be interesting.
Well, it's in tied third place for appreciation for the last month, and I
Yeah.
suppose for the
But it's
quarter
the
we're only marginally up.
yeah, it's the bottom quartile that's done the surge, though.
Yeah, I suspect that'll change over the rest of the year.
I reckon I've got to make a phone call to Claire Corby.
Yeah,
She'll
yeah, she'll
have
know.
the data on that.
She'll have the goss. Let's move on to rents, and what I suppose is good news for renters. The annual change in rents for houses, which in our data represent 78% of investor purchases, as Cate mentioned before, they're definitely preferentially treated by investors. Everything is pretty much down. I mean, we've probably got an interesting time in Melbourne because we saw some research from, I think it was the rental boards, to say that, you know, the cash held has diminished, signalling that investors have exited that market or not being replenished at the rate that investors are selling. So that'll be interesting to watch. But across the board, everything looks like a slippery dip from the double-digit peaks for a number of the cities. Now we're at 5.3% for houses in Perth as a number one, and that's on a very steep downward trajectory. I mean, 5.3% historically is a huge growth, but it went way higher than that. What are you reading in the tea leaves with that?
Well, we've had a change in a lot of things. So, firstly, I think what we've got to look at is the root of the demand. So we've got increasing numbers of people in households, so the household formation rate, and that's a big one. We've seen relationships, being formed and two separate households becoming one. All of those recovery stories out of COVID. We've also seen a lot of initiatives and opportunities thrown out there to first home buyers, which I think have been great. And we've got confidence around employment, so people will make purchase decisions when they're confident around their employment. But it's certainly, I look at Melbourne and I do scratch my head because we've had a lot of rental stock sold off, and I thought that we'd be the anomaly city for a long time. And I think that we have to pay attention to the number of new arrivals that have slowed down. That certainly had a bearing on immediate rental constraint and rental opportunity. But I do put it down to household formation rates mainly.
Yeah, and look, I think I remember this economist once saying, the longer things go up, the surer you are closer to them no longer rising in value any further. So there's a bit of that with rents that they've been flying for such a period of time that they became unsustainable. A bit of what we were just talking about with the Perth, Brisbane, and Adelaide property markets, and why we're seeing at the upper end of Brisbane and maybe it was Adelaide, the top upper quartile is no longer moving. So that's part of the picture, I think, with the rents. But if we look in a bit more of the sort of minutiae, rental growth is rising again in Hobart. So it's up 5.4% over the last 12 months, which is a little bit higher than it was a year ago. And no surprises, Darwin's annual growth trend has also gained momentum from 3.2% a year ago to 5%. So there is two capital cities that have slightly accelerated, as it's also accelerated in some regions. But the bigger picture, although it started to firm somewhat, we had 0.6% growth over the past 3 months. So that's actually performing better than it was at the back end of last year. Now, some of that is seasonality, so we'll have to keep watching to see if it's sort of actually now maintaining a reasonable level of growth. So that's across the country, 3.6% growth over the last 12 months. So that is above inflation. So it's still a reasonable level if you're an investor, and obviously still a little higher than you'd like if you're a tenant. So Perth has dropped from 13.6% a year ago, rental growth, down to 5.7, but still relatively high. So yeah, look, I think it had to slow down because of the rate of growth that, and that's been running for more than 2 years, like some, probably 3 years or a bit longer, even though I always refer to Pete's analysis that it had underperformed for a decade.
Just catching up.
Yeah, so it's still just catching up. One thing that is quite interesting to note is the capital city yield is at 3.52%, and it's getting closer to the regional yield of 4.41%. So, those sort of the price signals that can start to cause people to go, well, gee, maybe I don't need to or won't go out to the regions because the yield I'm getting isn't as strong relative to the city as it once was.
Yes.
Well, it's always a story of the growth eroding the yields when we're looking at that sort of stuff, and we saw the growth of the regions outperforming the capital city. So I guess that makes sense that it's come a little bit closer. But
Well, I also look at the balance of investment property to owner-occupied property. If we just solely look at supply and demand, which is a really crude measure, if there's a lot of investors flooding into a region and bolstering up investment stock, that will absolutely pull down prices or slow any sense of rental growth. Yeah. And I think we've seen a lot of that in the past with regions being hit hard by investors. Yes, it pushes prices up, but it also floods the market with rental stock.
Yeah, and I think you nailed it in your analysis of Darwin and why it's a different shape when we look at the quartiles. So the middle was outperforming. You're right in the analysis of the cheapies being units, but I also think it's a price point as well. Like we're still talking about Darwin with a median price in the sort of low to mid fives, and no other capital city is anywhere near a 5. I mean, Hobart's at 664. So perhaps the investors that are going into Darwin would be slightly more sophisticated. They may have invested in Perth or Brisbane or Adelaide or elsewhere. They can actually go in and get a house, but also 526K, that's not a lot of money for investors. I mean, in our data last year, they're spending 650 on average. That gives you a little bit of buying power in a place like Darwin, but nowhere else, right?
And a really strong yield.
Yes.
And the median for houses is actually a bit low at 607,000 for houses. Yeah.
Right.
And the units are 373, but people, probably aren't looking at units.
No. And that absolutely illustrates our quartile chart, doesn't it, Dave?
Yeah, 100%. And Darwin's a surprising city in terms of having a high percentage of units. In fact, it's the second highest percentage of units of every capital city in the country.
I wonder why that is. Why there's been so much medium high density development in Darwin.
Maybe for FIFO?
Yeah, FIFO.
Yeah.
It's a more affordable method of housing if you've got not just mine workers, but people that are on contract in the city. Not necessarily FIFO, but contract.
Yeah. Don't want to be maintaining the lawn when they're working 80-hour weeks for $1 million a year.
Or the rental demand's there because they've got a contract for 2 years. They don't want to buy in Darwin. It's not their home city, but they want to be living close in. I mean, developers will build where there's opportunity.
Yeah, interesting.
We've seen an absolute surge with Darwin. Like there's all of the cities, and then Darwin is like off the chart. They've got 35.3% more sales now than 12 months ago, which is quite telling. And there's more to it than just sales, but this is an interesting chart in tandem with everything else. Hobart, Perth, Brisbane and Sydney, they've all come off only a little bit, just a fraction, so they've been reasonably stable. Canberra's up, Adelaide's up, Melbourne's up. Melbourne's number 2 actually at 7.8%, but it's overshadowed by Darwin at 35.3%. I remember the agents capturing data, and it was very fast moving, and so you had to stand back and look at quarterly as opposed to monthly. But I think it is all traceable, very much so.
Yeah, I think, there were those 7 data points that I went through at the start of the episode on Darwin. There's just too many positive pointers. And, some of them are over a quarter, some of them are over 12 months. So even though these numbers are quite low, it is also proportionate to what we really should consider as a mid-tier regional city, really, Darwin versus, it's not in the realm of the big 5 capital cities.
So total property listings and new listings are down every single capital city in Australia. Is that typical in and around an election, or is there some sort of anomaly we need to unpack?
That's Anzac Day and Easter running into each other, as well as running into an election. So
Spot on.
everything's quite down in that new listings in the last month. So that's just that unique anomaly.
Yeah, you couldn't pick 3 weekends that most vendors would want to avoid having their campaigns and auctions running over. And this year, they were all together.
Yeah.
It was literally like when you get... it was like a solar eclipse when Venus jumps in as well.
Yeah, and I think the data supports that, with a monthly change in all listings minus 3.6, but new listings less than 30 days nationally 11.6% down. So that kind of says, okay, well, that's a very recent phenomenon. But let's look at new listings less than 30 days, because I still think, even though we can compare apples with apples to some degree, because everyone's affected by the election and Anzac Day and Easter and those sorts of things, there are some markets where new listings is really, really anemic. And what have we kind of observed in previous trends and cycles when we're seeing that?
Well, I guess if you're looking at the monthly change, if that's what you're referring to, Darwin, when new listings are really low, prices tend to go up, and they're minus 36. In Canberra, minus 25, definitely driven by the election. And I suspect, as I've already touched on, and there were some other numbers that I saw, I can't remember the specifics, that whereby I thought Canberra might be about to start to show some robust recovery or growth beyond this. But those two really stand out. I guess Sydney's monthly change of minus 23 is very high as well, isn't it? But yeah, it you can't,
if we look at,
that would be beyond the reasons we've already noted. It just is very high.
Yeah, I think monthly is really hard for this month because of what we've just had with Easter and Anzac Day and Election Day. But when we look at, I think old listings tell the truth. They tell the real story. And Darwin's just heads and shoulders there. They're all getting absorbed.
41.1% down for old listings. You can contrast that with Canberra, which is up 60.1. I mean, that's an interesting one, Dave, if you are sort of seeing some green shoots for Canberra. And I agree, there are some green shoots with, I think, the contraction of new listings, but things are stuck on the market a little bit. Maybe these were campaigns that preceded the election and have just been kind of running along on autopilot, or is there something else to say about our nation's capital?
Canberrans, with such a high percentage of the population, I think it's like 60% working in the public service, are very interconnected with the election cycle. We've known there was going to be election in the start of this year from late last year. If you even remember the media cycle late last year, people, we're talking about when's the election going to be? When's he going to call it? Canberrans will have been holding off making decisions around property, around jobs, around moving. Do they go back to the cities or locations where they came from? Am I still going to have my job in Canberra? It's quite a transient city. I would say for probably up to 9 months. I suggest that's part of that picture, and is possibly what will create opportunity out the other side. of the election.
Cate, what do you think about those comments? And we could maybe weigh in the ACT's distressed listings, which is contracted by a way more than any other capital, 3x at 32.4% down. So people aren't selling under duress in ACT, but they're taking a little while to do it. What can we understand from that?
I think Dave's on the money. They are absolutely invested in what's going on at Parliament House because for a lot of them it's tied to employment. We know that employment absolutely correlates with market confidence. What the distressed listings chart shows me though, and we're looking at very, very low numbers. I mean, 25 properties is what we're talking about. I don't know that that's a data point that I'd really circle and suggest that there's a relationship here that we can tell a good story from. I think the old listings and current listings and new listings tells a better story for Canberra, and I think it's exactly what Dave was speaking about. They're just taking a little bit longer to sell.
And if we think about the Liberal campaign, obviously we know it's a monumental failure. Interestingly, we've got the first ever female Liberal leader, it's a weird thing to say in 2025, but
it's great. It's just a surprise that it's that party, but anyway.
Yeah, exactly.
They had to choose her, and I'm glad they did.
Well, they've got to try something, haven't they? But when we look back,
let's try something. How about a woman in charge for the first time ever?
Yeah, let's get crazy. The good old Libs. If we think about the original or the beginning of Dutton's campaign, there was a very kind of strong red flavour coming from the US, where Dutton seemed to be modelling himself on Trump, especially kind of posturing about public service cuts. And I'm guessing that would have weighed heavily on Canberrans. And of course, then Trump went into the tariff mode. And I think that really irreparably damaged the Dutton campaign. And we're going to see everything turned up to 11 when we're talking about public servant cuts as part of an election campaign in Canberra, right?
100%. And I had that in my mind when I was saying what I was saying before. I thought I wouldn't speak on that specific point, but definitely, that scared the bejeebers out of a lot of public servants that they'd have to work from the office 5 days a week. I mean, why on earth you would go from you'd be able to work at home 5 days a week to have to go to the office 5 days a week? Why they wouldn't say, we expect all public servants to be in the office at least 2 days a week or 3 days a week. But why you jump to 5 days a week is just silly policy, extremism, and cost them, I'm no doubt, lots of votes. But I think it also does play into what we're talking about with the Canberra property market as well. But I've just got median days on market just out 8th of May for the last 4 weeks from SQM, and their selling times are falling in Canberra. It's come down 8%. So things are selling faster in the last 4 weeks. What's it been, 2 weeks since the election now? About 2 weekends?
Nearly, yeah.
Yeah, so Darwin's time on market's fallen by 13%, Melbourne by 11%, Sydney 10%, Canberra 8%. So they're the ones with the steepest decline. So we've got a little bit of that post-election data coming through there for Canberra.
Yeah.
Let's stick with sentiment, but go national because Canberra is boring.
It's a nice place.
Shout out to my Canberra mates. No, I can't get through an episode without upsetting anybody. Canberra's actually a lovely place. I had the best ever Italian meal in Canberra. That was a surprise.
Yeah,
there you go.
There
you go.
Than they once did.
Right. So, yeah, sorry, Canberra. Consumer sentiment, we've got the data for May 2025, pretty much hot off the press from the Westpac Melbourne Institute. Starting with you, Dave, interest rate expectations is telling a little bit of a story. There's no economic data coming out saying that, we're going to have an inflation problem or the economy's, off to the races. Why have we become a little bit more depressed about the prospect of cuts?
Well, I think I just brought in capitals actually spooked by tariffs and Trump.
Yeah.
Um, Ultimately, for my notes, because the markets are still predicting 4 more rate reductions, yet we become more pessimistic about where rates are going. So, I think that's the average consumer has got quite worried about what's going to happen. I think when we get um, the expected 25% basis drop next week, which the markets have betting at 100%, and they're about 60% or 50%, I think, for even a 50 basis point drop. I think a lot of the general public will go, okay, no, rates are coming down. I have more confidence in that, and that might bump up to closer to 100 again. So that's why I think that's dropped by those 8 points in this consumer sentiment reading.
Yeah, that makes perfect sense. And we can probably expect a little bit of a bounce back when things calm down a little bit. Cate, what were the takeaways for you with the sentiment across the board?
I was a little bit surprised that we didn't really have anything jumping around very solidly. If we have a look at all of our monthly changes, family finances versus a year ago is at 7%. The next one, minus 7.5% interest rate expectations, which Dave's just covered off. Time to buy dwelling is up 5% in 1 month, which is probably signalling that we know that there will be an interest rate cut, and it's probably getting closer to being the time to jump back in. But still, at 90%, it's not. More people are saying let's keep waiting than people are saying let's jump in. So that is interesting. The average. It is on its way. Yeah, and 100 means balanced.
Yeah, balanced. Yeah,
And
I
when we
think it's
look
on
at
the way above 100.
the average long term is 120.
Yeah.
So we're still under that. But yeah, I was a bit surprised that it was as anemic as it is, considering what's going on overseas, what's happening with, trade wars and an election. I thought we'd see these figures dancing around a little bit more, to be honest.
Let's move to lending. We've got first home buyers having their time in the sun, representing more than a third of all owner-occ purchases, and investors down for the quarter, but still up very, very high over the previous 12 months. What can we unpack on that one? Is this a little bit of a blip, or are we seeing just investors coming down from such huge numbers? Because the lending commitments for investors, I think, were peaking at nearly 40%.
Sadly, we can't tell much from this chart at all, because it is last year, and that's my one bugbear with the ABS. They're very slow on the uptake with providing us with updated information. So we covered off this chart in our last monthly market update.
All right. Well, I want to ask you a question, Dave, backtracking to that data that's showing the quartile movements, and Sydney's the only capital where the top end of town are driving the growth. Typically, the top quartile is driven by money markets, especially in Sydney. It doesn't seem like there's anything positive to talk about in that, other than the bounce back from the initial sort of shock losses from the tariffs. Is there something else at play there, or is it just a small market where a couple of big transactions can make a big difference?
I'm finding Sydney hard to read at the moment. I because I think Melbourne is going to rebound, and Sydney hasn't done a lot for a period of time as well. It's been down, sort of bouncing along the bottom, so to speak, but not as weak as Melbourne. I do suspect, and it's still below its peaks, but that's only from 8 or 9 months ago. So I just wonder if people are seeing value in Sydney at the top end, and so people are feeling confident. I guess probably with deeper pockets, you tend to more closely watch money markets, and I suppose try to make decisions in advance. And I think something we can be reasonably confident in, but not as confident as we were with the tariff issues. It was rates falling. So I wonder if that's what's driving that. People going, look, we're going to be 1% below on our interest repayments. Let's get in now, and that's what I'd probably put that down to.
Yeah, interesting.
I do think Sydney's going to move. I think it's going to follow Melbourne. Well, actually, I'll just touch on, I put together a few. So Darwin had those sort of 8 data points, or 7 data points that I shared at the start. Melbourne's looking pretty good on a fair few of pretty much all of them as well, just not as strong as Darwin. So time on market's down 11% over the last quarter. Sales volume is number 2 in the country, up 7.8% over the last 12 months. Rents over the last rolling 4 weeks is actually at number 2. Rents going up by 0.9% with SQM, according to SQM. Clearance rates have sort of been marching up to 70% from around 60% over the last 4 to 6 weeks. So trending up. It's still, in the terms of that affordability piece, still 5% below the peak prices in March 2022. So people can see affordability and see, look, properties were selling for more 3 years ago when they look at sales history. According to PropTrack REA, it's actually been the number 1 in price growth over the last quarter.
Right.
Now, that's not big numbers, but it's still number 1. New listings, I mean, they're all down, but it was down by 16%. Not as April was a strange month, but total listings are lower by 2.3%, according to SQM. So, there's a lot of signals there for Melbourne, which I think will get stronger.
Interestingly. And Cate, if we look at the data, I mean, Melbourne is 1% quarterly growth, yet all the seat of the pants and anecdotal evidence seems to sort of beg the question, why can't we see it in this data yet?
Yeah, there's a couple of reasons for that. We've got to talk about where that anecdotal evidence is coming from. It's probably coming from buyers' agents. If we chat to finance brokers, they understand volumes, but they don't understand how competitive an auction is unless they're getting the absolute overview from their clients. Buyers' agents can tell you how auction attendance is and how hot properties are, but we have to always remember that buyers' agents are engaged by people who are happy to pay their fee, and when they're selecting properties, you'd like to think that they're selecting the really good performers that are the ones that attract a really excitable crowd. So that natural bias is there, not just because I can't see through the data, it's because the properties I'm focusing on are more likely to be ones that a lot more people like. I'm not going to pick out the stuff that is having nobody turn up at auction. So that's one reason. The other one is data lag. And we're seeing a lot of long settlements at the moment in Melbourne. I'm seeing more 90s and 120-day settlements than I've seen typically. A lot of reasons for that is people are making the decision to purchase their next property knowing that they have to sell their current property.
Right.
When you're getting upgraders, especially where kids and schools and all that kind of stuff's involved, they don't really want to sell and then be homeless. They want to buy first and then sell. But if bridging finance isn't an option or if it's cost prohibitive, they'll ask for really long settlements. And a lot of our data gets tracked and recorded when properties settle, particularly, value in general, it's when it goes through the SRO.
Yeah, interesting. That's a good point. Those long settlements will lead to that data lag, but even still, I'm surprised that we aren't seeing it do a little bit better. All right, well, yeah. I think we'll call that an episode. But as a little bit of fun, I want you guys to answer one question. Let's guess the month of May. What's going to be the top 3? I mean, Darwin's galloping away. You can probably set your watch to that. But we've got Sydney, Melbourne and Brisbane all doing 1% this month. Adelaide 0.9%, Hobart 0.9%. We're there or thereabouts. You can throw a blanket over everything apart from Darwin. Give us your top 3.
Ooh, I love this. Okay, I'm going to say Darwin is number 1. I'm going to say number 2 is Hobart. a couple of little reasons why I'm circling Hobart. And Hobart's in my opinion, it's the most volatile with not necessarily a volatile market, but the data's often volatile because you've got so few data points. Yeah, some months it looks like it's flying and then it settles down. But I think that we're seeing an increase in rent down there, and obviously that will transpire into rental yield. That will continue to attract investors. It came off the boil a little bit, but it's so very pretty, and there are a lot of reasons why investors have turned to Hobart, including price points. But I think that rental demand and rental growth will certainly support it. And the next one I'm going to go out on a limb and say we'll do something is Canberra. I think now that the election's behind us, we'll see some decisions being made there.
Interesting. Dave, would you deviate?
You said Melbourne as well in there?
No, I didn't. No. I think Melbourne will do okay. I'd like to think it'll stay positive, but I don't see it being in the top 3 for 1 month.
Yeah, I'll go with Darwin, Hobart, Melbourne.
What about you, Mike?
Well, I was thinking Darwin, Hobart, but then Melbourne or Canberra, and you've kind of split me on that. Look, if I have to pick one, I might go for Melbourne. I want to join your team for a second, and I think we've been waiting so long for this data, and the market's humming along. So I'll join. Who was that? You, Dave?
Team Melbourne.
Team Melbourne. All right. Well,
Canberra definitely could, particularly a smaller market, easier to move faster. But yeah.
There you go. Just a little bit of fun, and one data point doesn't make a trend line. We should put that disclaimer in there.
We're just being silly.
We're being silly. We're having a little bit of fun. If you deviate from any of those ideas, send us through your details. We'll be happy to hear. But the good news for you is that we'll be here to unpack the May data as soon as it comes out. Until then, happy investing.
See you next week.
Everyone.